Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning. Today will be Thursday, the 8th of May, 2025. So before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So we have quite a significant things to cover for today. So as usual, before we jump straight into the intraday technical outlook on those broad-based cross-asset classes, let's have a recap what has taken shape yesterday in terms of key events, news flow, economic data release, and as well as their impact on the broad-based cross-asset classes. So we know that yesterday is a rather significant, important event day, which is the outcome of the US Federal Reserve monetary policy and as well as Fed Chair press conference. So let us start with the gist of the Fed policy, the Fed meeting first, all right, yesterday. So in the Fed meeting yesterday, as usual, over here, is that the US Federal Reserve maintained its interest rate unchanged for the third consecutive session. Okay, let me expand my screen so that you guys could have a better view of the chart, better view of the screen over here. All right, so this is large enough. So here are the key takeaways from the Fed interest rate decision. So the Fed decided to keep the Fed funds rate unchanged at 4.25% to 4.5%. So that's within market expected over here. And in the statement, they do mention that the risk of both higher unemployment and higher inflation has risen. So what it means that over here is that the risk of stagflation has increased as well. And Fed Chair Powell, during the press conference, he repeated the same language that he used for months now. Overall, it's still a wait and see approach. We don't think we will need to be in a hurry to rise interest rates. And he said that there are cases where it will be appropriate to cut or stamp it. I couldn't confidently say that I know which is going to be. That means, i.e., unsure at this moment in time, wait and see, because of the uncertainty surrounding the current White House administration style of trade tariffs policy and implementation. And impact on the market, currently based on the CME Fed Watch 2, according to the market participants, pricing on the Fed Funds futures contract for the next meeting in 18th of June, market participants are looking at 80% chance that the Fed will also remain on hold to maintain the rate at 4.25% to 4.5%. So only 20% chance that the Fed is likely to cut on the next meeting on the 18th of June, only 20%. And this 20% has been reduced from 30% a day earlier before the outcome of yesterday FOMC meeting. So what we could see is that after the outcome of the FOMC meeting, market participants feel that the Fed is not so dovish right now, still wait and see, and because of the stagflation risk has increased, so they are expecting the Fed to also remain on hold in June. All right, 80% chance on hold, only 20% chance that the Fed will cut by 25 basis points to bring the Fed funds rate to 4% to 4.25%. And this has been kind of reduced from 30% a day ago. All right, but overall, it's still a rather small percentage that the Fed may cut in the June meeting. So if you look at the aggregated probability based on the current information right now, that in terms of economic information and economic data that is being bombarded in the financial markets. So Fed funds futures market participants is only looking for a higher chance of the first Fed rate cut in 2025 to come in the 30th of July meeting, where market participants is pricing in a high chance of 80% for the Fed to bring it down to 4% to 4.25%, and another 63% chance of another cut on the 17th of September, and also quite a high chance of 92% that the Fed will reduce another 25 basis point cut. So net overall, the market on the 10th of December FOMC meeting this year. So net overall impact is that the market participants are still looking at potentially 3 interest rate cut of 25 basis point each by before 2025 ends to bring the Fed funds rate lower to 3.5% to 3.75% from the current rate of 4.25. Sorry, to bring the Fed funds rate to 3.5% to 3.75% from the current rate of 4.25% to 4.5%. So that's 3 interest rate cuts of 25 basis point each potentially. So net overall, the market participants are still looking at a more optimistic view in terms of interest rate cut. Why? Because on the previous dot plot that was released in the March meeting this year, FOMC meeting this year, the Federal Reserve officials only projected 2 interest rate cut in 2025, whereas market is now looking for 1 more additional cut of 3. So Fed Chair Powell did actually highlight in the meeting over here. Let me share with you guys. Where was the meeting? Yeah, Fed Chair Powell. Okay, where was it? Yeah, he didn't mention anything about the Federal Reserve latest thing about the projection. And the next projection will only come in June. All right, so until now and then, market participants will still be looking at various signs of up and coming Federal Reserve official speeches before the next meeting in June to actually change their projection, because at the moment in time they are looking at market is looking at 3 cuts. That is 1 more additional than the whatever the Federal Reserve officials projected in the dot plot in the previous meeting in March. Okay, because like I mentioned, not every meeting there will be a dot plot. It's only every 3 months. So the latest dot plot is in March. So the next dot plot projection will be in the June meeting. So it's every 3 months there'll be a release of this new dot plot over here. All right. So market reaction over here so far was initially there was actually, let me share with you guys on the chart of the S&P. Where is the S&P? Yeah. Okay. So this is the chart of the S&P. So initially after the meeting, after 2 a.m. Singapore time, right after the release of the outcome and the FOMC statement, the market actually plunges by 0.5%. This is the S&P 500. So the US stock market actually saw an intraday loss of 0.5%. But as Fed Chair Powell speaks, okay, the market actually rallied and closed in the green. All right, it closed in the green by 0.4% over here. All right, so net overall, it was a rather positive intraday performance for the major US stock indices, and it managed to erase its intraday loss. So as Fed Chair Powell speaks over here, the market reacted positively in the US. The market means i.e. the US stock market reacted positively and managed to close in the green at the end of yesterday's US session, where all the major stock indices managed to have modestly gain. All right, so the Nasdaq 100 is also up by 0.4%. The Dow Jones is up by 0.7%. The Russell 2000 up 0.33%. And also the reason why the S&P and the Nasdaq 100 is managed to only show modestly gain, because there are 2 major mega cap stocks, which is Apple and Alphabet. Google actually put a cap on the bullish tone on the US stock market yesterday. So what do I mean by this? So if you look at the heat map of the S&P 500, we start to see a very clear deeply in the red Apple, which was the one that is clearly stuckingly underperformed the S&P 500 yesterday, and that being a mega cap stock over here, they actually kept the gains that's being seen on the S&P and Nasdaq 100 yesterday by less than 0.6%. So the Apple is down by negative 1.14%, and Google is the worst performing mega cap stock, which is down by negative 7%, 7.4%. So what causes Apple and Google to actually underperform the market is more related to their firm specific negative news flow. So yesterday, there's this particular news flow over here. Let me highlight. Where was it? All right, I think I didn't put it up. Okay, it's over this tab here. Let me drag it over. Yes, this is the one. Okay, so that you guys could see. So previously, Apple and Google has a kind of a partnership agreement where iPhone is the web browser is Safari, and even the what you call it app MacBook as well. Notepad is also Safari, but they actually allow Google search engine to be actually used in Apple products. So right now, Apple now ISOs move to AI search. All right, over here. So Apple is considering revamping Safari to focus on AI-powered search engine, potentially ending its long-term partnership with Google. Okay, so that actually causes Google. That means Alphabet is the parent company share price to plummet by 7.5% yesterday, and Apple itself also faces this negative feedback loop of negative 1.14%. And because of these two stocks are mega cap stocks in the S&P 500 and the Nasdaq 100. So because of this very clear underperformance of Apple and Google, that put a cap to yesterday's gain on the S&P 500 and Nasdaq 100 to less than 0.6%. And also the top performer within the US stock market yesterday was the semiconductor, where you see major semiconductor related US chip stocks rallied by more than 1%, Nvidia leading the fort by 3.10%, because of also a sector specific news flow that is positive toward the US semiconductor stock. So what is this sector positive news flow? Is because there's this news flow where Trump, okay, give me a minute. Yes, okay. So Trump decided to reset global chip curbs, prep new AI restriction. All right. So over here, Trump administration has plans to reset or revoke Biden era AI chip curbs as part of a broader effort to revise semiconductor trade restriction over here. So the repeal seeks to refashion a policy launched under President Joe Biden previously that created three broad tiers of country regulating the export chips from Nvidia and others. So previously, Biden administration has this three tier of we call it restriction, where US semiconductor could conduct business according to this three tier. So what Trump at the moment, he decided to actually remove this three tier and to actually create a new administration, all right, a new way of tiering system, all right, in the future. So Trump administration will not enforce the so-called AI diffusion rule. This is the three-tier rule that is being previously we call it implemented by the Biden administration when it takes effect on 15th of May. So it's actively, that means Trump administration is actively working towards a new rule that will strengthen the control of chips abroad. So until now, there's no detail what is this new rule is supposed to be, and because of that a revoke of that previous Biden administration diffusion rule, that is deemed as a intraday positive news flow that triggered that outperformance on the major US semiconductor stock yesterday, that Nvidia is up by 3.10%. So that kind of a counterbalance with the negative performance of the two mega cap stock, which is Apple and Google, and the net effect is a positive performance on the S&P 500, the Nasdaq 100 yesterday. All right. So with that, the dollar was actually kind of sideways over here. So overall, if you look at the 5-day rolling performance of the dollar against the major currency, is almost flattish after ex-post FOMC meeting. So if you look at the dollar index over here, okay, so the US dollar index still continues to trade in a lackluster fashion. Yes, even though yesterday it managed to gain by 0.5%, but it still can't break above the 20-day moving average that is acting as a key near-term resistance since the 1st of May rally on the US dollar index. All right, so this is the daily chart of the US dollar index. So what you could see over here is that the dollar index since 1st of May, it can't break above the downward sloping 20-day moving average. And also yesterday is attempt to test it over here by pushing up a gain of 0.5%, and right now during Asia session the dollar is down by negative 0.25%, as represented by the US dollar index that can't have a clear break above the 20-day moving average. That is acting as a key near-term resistance level. So later I'll cover what is the key intraday technical outlook on all the major dollar pair. And also, as we are speaking right now, there's some news flow also pertaining to US China trade situation. Is that we know that Trump yesterday during the US session, he mentioned that he won't lower China tariffs to jumpstart trade talks between China and US. The first round that is going to take place over the weekend. All right, so as I mentioned over here is that Treasury Secretary Scott Bessent and Trade Representative Jameson Creel will meet Chinese official this weekend in Switzerland. So the Chinese, we call it officials or team will be led by Chinese Vice Premier He Lefeng on the first round of trade negotiation talks over here. But Trump seems to be still rather taking a hardliner stance, stating that he will not back down any current duties that is being imposed on Chinese imports as the first round of trade talks between US and China looms this weekend in Switzerland. So perhaps this first round of trade talks may not be so rosy at all. All right, given Trump's hard stance at this moment in time, stating that he will not lower China tariffs as the first round of China-US trade talks looms this weekend. And also in today's Asia session, there's a kind of optimistic news flow pertaining to US trade deals that is in talks with other countries right now. And Trump said that in his social media post early Asia session today, saying that news is coming on a major trade deal with a big country, and he plans to hold a news conference on Thursday today at 10 a.m. Washington time. That means 10 a.m. US time. That means that's 10 p.m. Singapore time today. Okay. Based on his social media post, he didn't mention the name of this country, but overall, what is this over here? Yeah, he didn't mention the name of the country, but however, in a separate news released by Bloomberg, so Bloomberg reported that saying that New York Times reported that the deal could be United Kingdom or would be United Kingdom UK, citing 3 people familiar with the plans. And with that, the pound actually extended gains on this report. So later I'll touch on the sterling dollar intraday technical outlook, which we have been bullish since last week. All right, over here. Okay, so some kind of trade deal optimism that is being seen in today's Asia session. But however, with this trade deal optimism, we start to see mixed performance in the broad-based cross asset classes. So what do I mean by that? Yes, this trade deal optimism able to see some the US stock market extended based on the futures contract of the E-mini, S&P 500 E-mini and the Nasdaq 100 E-mini is showing a gains in today's Asia session of 0.6% and 0.8%, and only modest gains in the Nikkei 225 is up by 0.2%. The Hang Seng index is gaining pretty strongly, up by 1%. So still recall that from a technical perspective, whatever weakness that was seen on the Hang Seng index yesterday is all minor corrective pullback, and that minor corrective pullback has made its support on the Hong Kong 33, which I highlighted yesterday, and that bullish reversal actually took shape right at the support that we highlighted yesterday as well, when I cover the second segment later for you guys on the intraday technical outlook on the Hong Kong 33 representing the Hang Seng index. But what's interesting over here is that safe haven demand is not backing down. All right, so we know that if we start to see trade optimism flow coming back into the picture, we tend to see gold price selling off as well. But for interesting for today, gold price is not selling off at all. Instead, gold price is rallying. So gold price is up by 1.25%. And if you look at the daily chart of gold XAU/USD, is almost recovered yesterday's losses of 1.95%. So it really retraced up more than 50% of yesterday's losses by having a intraday positive gain on 1.25%, right above a upward sloping 20-day moving average. So based on the price action on these cross asset classes, it doesn't seem to us that gold market is convinced that the trade deal optimism will actually lead to a all-out risk on rally in the broad-based cross asset classes. Yes, we may see risk-on situation in the stock indices, but the gold market being used as a safe haven proxy is not telling us that over here. So I would say that it's rather a mixed bag of performance. So i.e. the gold market is not convinced that this trade deal optimism may last or may persist for in the medium term. So that's why gold price is showing a much more firmer price action right now as we are speaking. All right, so that should cover the first segment of today's daily dose, where I touch on the important news flow drivers and their impact on the intraday cross asset performance. So let us now move into the second segment of today's daily dose, which is the intraday technical outlook on these broad-based cross asset classes, starting with the FX market. So let me expand my screen. All right. Okay, I suppose the screen should be working. Okay, let me do a check again. Okay, good. I think the screen is up and running. Okay, so let me start with the FX market first. Okay, so we know that this is the dollar index. The dollar index continues to remain lackluster, indicating that no clear strength of dollar strength coming back into the FX market. So with that, the euro dollar also continues to hold within a sideways range, but still above the pivotal support level at 1.1270/1.1230. So still no change, right? Still maintaining that intraday trend bullish bias, but price action got to break out above the first resistance level that got rejected yesterday during the during the start of the US session at 113.70. Only a breakout above 113.70, then we will see the bullish breakout or an increase in probability of that trend bullish bias in first step, exposing the next near-term support level at 114.25, followed by 114.80 next. Okay, so that's for the euro dollar. However, only a breakdown below 1.1230 that would invalidate today's intraday trend bullish bias to see the start of another corrective decline sequence, exposing the next near-term support level at 111.12, 110.50. Right, so that's for the euro dollar. So next up will be the sterling dollar. So the sterling dollar is the biggest movement so far. It's up by 0.5% due to that potential UK US trade deal announcement that is potentially going to be announced in 10 p.m. Singapore time today, as reported by Bloomberg, according to sources from the New York Times over here, which I actually shared with you earlier on in the first segment of today's daily dose. So what I could see over here is that there's a reversal right exactly at our 133 short-term pivotal support level, and also at the 20-day moving average, acting as a support, and also this former descending trend line that was previously capping price action since 29th of April, and it did a bullish breakout on 6th of May, and that bullish reversal actually hit right exactly at this previously minor descending resistance, now turns into a pullback support, confluencing exactly at the 20-day moving average and the 133 pivotal support level that we highlighted yesterday as well. So no change, using 133 as my short-term pivotal support level. We will still maintain our intraday bullish bias on the sterling dollar. First resistance level to watch for today is 134.20, followed by 134.80, and there's also another risk event that we got to take note of, that it may impact the sterling dollar before the announcement of that so-called potential UK US trade deal out at 10 p.m. Singapore time today. It will be the Bank of England Central Bank monetary policy decision. So later I'll share with you what is the timing when I cover the third segment of today's daily dose, which are the key events and data to look out for. All right, so only an hourly close and a breakdown below 133 figure level will invalidate today's intraday trend bullish bias on the sterling dollar to see another round of choppy corrective decline sequence unfolding, exposing the next near-term support level at 1.3205. Below 1.3205 exposes the next near-term support level at 131.20. So overall, in a nutshell, still maintaining that intraday trend bullish bias, using 133 as my short-term pivotal support level for the sterling dollar, and bear in mind that today there are two particular risk events that may impact the sterling dollar. One is the Bank of England monetary policy decision, and one is during the US session, which is 10 p.m. Singapore time, that potential US UK trade deal that may be announced according to the news flow that I shared with you earlier. All right, so onwards next will be the dollar yen. So still recall that dollar yen yesterday we are looking for a rebound, and that rebound actually take shape right exactly at our pivotal resistance level at 14425, and which is also coincide with the former minor ascending channel support now turns into a pullback from the low of 22nd of April. And also what's interesting over here, upon hitting very close to the 14425 short-term pivotal support, we see a series of bearish candlestick pattern with a small little body and, and some kind of a long tail. So we have a shooting star and as well as a hanging man. All right, in today's Asia session, then followed by a negative price action of a hourly Marubozu. All right, so there's some signs of we call it bearish momentum that is coming back into the dollar yen after the expected bounce that we highlighted yesterday, right below the 14425 short-term pivotal resistance. So for sure, this 14425 short-term pivotal resistance managed to attract some form of bearish intraday pressure on the dollar yen. So with that, that will be indeed our short-term pivotal resistance that we will use for today based on the current price action that we are seeing right now on the chart on the dollar yen as we are speaking. So maintaining that intraday trend bearish bias on the dollar yen, 14425 short-term pivotal resistance. Near-term support level to watch will be at 14295. Let me put it in writing, which is also the 20-day moving average, I think, as a near-term support level as well. And also was yesterday's intraday low after the release of the FOMC meeting statement. All right. So let me put it in writing. Okay. Where the heck? Okay. Give me a few seconds. Yes, I'm able to write it down. 147.95. Right, so this will be our first near-term support level to watch in our bearish trend, in our potential trend bearish bias view on the intraday basis for the dollar yen. A breakdown below 147.95 may expose more weakness towards the 142 figure level. Only an hourly close and a bullish breakout above 144.25 will invalidate today's intraday trend bearish bias to kickstart another round of mean reversion corrective rebound sequence, exposing 14520 above 14520 may see 14610 coming in next, which also correspond to the downward sloping 50-day moving average. So i.e. in a nutshell, still maintaining the intraday trend bearish bias using 14425 as my short-term pivotal resistance level. First near-term support level for the bears to counter will be 147.95. Only a breakdown below 147.95 may expose further weakness towards the next near-term support level at 142 figure level next. So that's for the dollar yen. Next up will be the Aussie dollar over here. So the Aussie dollar rather did a choppy movement over here. So we start to see the some kind of noise at the 64.40 short-term pivotal support that we highlighted yesterday. Hourly RSI was rather bullish right now after hitting a extreme oversold level. It managed to do a bullish exit over here, and right now it's so attempting to go above the 50 level mark as we are speaking. So tolerate a bit of the excess towards today's Asia session low. Right, yesterday US session low at the 64.20, around 20 pips below 20 pips below the pivotal support of 64.40 that we have yesterday. So tolerate a bit of excess at 64.20 short-term pivotal support level. We will still maintain that intraday trend bearish bias with intraday trend bullish bias, pardon me. Okay, so I repeat again, a bit of excess right now at yesterday as is actually whipsaw around our 64.40 pivotal support level that we have in our trend bullish bias yesterday. But given that the positive reading that's being seen on the hourly RSI right now, we will tolerate the excess to 64.20. So that's 20 pips below our pivotal support that we have yesterday at 64.20. So we'll still maintain that intraday trend bullish bias for today. So first resistance level to watch will be 64.90. All right, over here. So this congestion area here, 64.90 will be my first resistance level to watch, 0.6490. All right, so this will be my first resistance level to watch. Above 64.90 may see the next near-term resistance zone coming in at 65.20/65.50. Only a push down and hourly close below 64 20 will invalidate today's intraday trend bullish bias to see a choppy downward drift to retest 63.70, the next near-term support level, which is so confluence with the rising 20-day moving average. Right, so that sum up the intraday technical outlook on the major FX pair. So one particular pair I want to look at will be FX cross pair, will be the Euro Sterling. All right, over here. So the Euro Sterling ahead of Bank of England meeting today has really transformed into a minor downtrend since the high of 21st of April. We could see that it's trading within this descending channel and also trading below the 20-day moving average since 28th of April. So there is an interesting bearish intraday trend setup that is being surfaced on the Euro Sterling cross for now, ahead of Bank of England meeting thereafter. All right, so I'll be using 85.40 as my short-term pivotal resistance level. We also confluence with the 20-day moving average very closely as well to have a intraday trend bearish bias view on the Euro Sterling. First support level to watch will be 84.50, which is the 50-day moving average. A breakdown below 84.50 may expose the next near-term support at 84.10, which is the one-time Fibo extension taken from the high of 11th of April, and also the lower limit of this minor descending channel that is in place since the high of 21st of April. Only a push up and the hourly close above 85.40 will invalidate the intraday trend bearish bias will invalidate the intraday trend bearish bias view for the Euro Sterling to see a squeeze up towards the next resistance level at 84.80, followed by 86.20. Right, so some one interesting cross pair to look at, Euro Sterling, ahead of today's Bank of England monetary policy meeting. All right, so up next will be the major stock indices intraday technical outlook, starting with the Hong Kong 33 that is representing the Hang Seng Index. So still recall that yesterday, Hong Kong 33, we do have a bearish bias, but this bearish bias view is more like a minor pullback within a short-term uptrend phase that is still intact. So minor pullback support level almost mid at 22,380 over here. And right now, given that the price action is piercing up above the 50-day moving average, I would have a tightened short-term, I will have a rather tightened short-term pivotal support level. Previously, I prepared it at 22,110 at the start of today's Asia session. But given the ongoing positive price momentum that we are seeing right now, I will tighten my short-term pivotal support to 22,380 instead. Right, given that it's now breaking above the 50-day moving average as we are speaking right now on the Hong Kong 33 representing the Hang Seng Index. Okay, so using 22,380 as my short-term pivotal support level for today on the Hong Kong 33, we'll flip back to a intraday trend bullish bias. Next near-term resistance level to watch 23,360, which is the upper limit of this minor ascending channel drawn from the low of 16th of April. Above 23,360 may see the next intermediate resistance coming in at 23,740, which confluence with the minor swing high of 25th of March, 27th of March, and 28th of March. Only a push down and hourly close below 22,380 will negate today's intraday trend bullish bias to expose the next near-term support level at 22,110. Only a breakdown below 22,110 may see another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 21,605, which confluence with the 20-day moving average as well. So in a nutshell, given the current bullish reversal that we see right now, yesterday's minor pullback is likely to have ended, and the Hong Kong 33 is likely to have resumed its impulsive up move sequence within its ongoing short-term uptrend phase, using 22,380 as my short-term pivotal support level for today. Onward next will be the Japan 225 over here. So the Japan 225 continues to trade in a sideways range configuration over here. And what we could see over here is that the sideways range configuration has now started to see some kind of positive momentum coming into the picture on the Japan 225 by seeing a series of higher low on the hourly RSI, and the hourly RSI also starts to trade above the 50 level mark and breaking above the parallel descending trend line resistance right now as we are speaking. over here. So some form of bullish momentum that has started to flip back into the Japan 225. So yesterday we do have a bearish bias below 37,380. First support level has been made at 36,650. So with this positive momentum reading that's being seen on the hourly RSI right now. So we got no more conviction to be maintain a bearish bias for Japan 225, but instead right now we will flip to a intraday trend bullish bias for the Japan 225, representing the Nikkei 225 using 36,650 as my short-term pivotal support level. First resistance level to watch 37,380. A breakout above it may see the next medium-term resistance coming in at the medium-term resistance coming in at 38,135, which also confluence with the 200-day moving average, and as well as the descending trend line resistance that is still in place since 31st of January 2025. Only an hourly close and a breakdown below 36,650 will invalidate today's intraday trend bullish bias to expose the next near-term support level at 36,200, which is correspond to the 50-day moving average. A breakdown below it may see a deeper slide towards 35,470, which correspond to the 20-day moving average. So i.e. in a nutshell, given that the hourly RSI has turned positive, representing some form of intraday bullish momentum that is building up on the Japan 225, we will flip to an intraday trend bullish bias for today using 36,650 as my short-term pivotal support level. Onward next to the European stock index, which is the German 30, representing the German DAX. So the German 30 also, yesterday we have a neutrality sense. Price action hit the lower neutrality limit and shaped a bullish hammer candlestick at 23,070. Hourly RSI continues to print a higher low and is now surged above the 50 level mark, hasn't hit the overbought region yet. So indicating that bullish momentum has started to creep back into the Germany 30 index on the intraday basis. So with that, I'll be using 23,070 as my short-term pivotal support for today. Flip back to an intraday trend bullish bias for the Germany 30. Above 23,480 may see the next resistance coming in at 23,920, which is a Fibo extension level 1.382 from the low of 7th of March or 7th of April, pardon me, and also correspond to the upper limit of this ongoing minor ascending channel that is in place since 11th of April. Only a sudden push down and an hourly close below 23,070 that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence, exposing the next near-term support level at 22,685. Below it sees a deeper slide towards 22,320, which correspond to the 50-day moving average, acting as a similar support level as well. So given the positive reading that's being seen on the hourly RSI, indicating that short-term intraday bullish momentum has more or less surfaced on the Germany 30, we will flip to a neutrality stance to a bullish intraday bullish stance for today on the Germany 30 using 23,070 as my short-term pivotal support level. Next up will be the major US stock indices, using the US Wall Street 30 over here. So the US Wall Street 30 continues to trade sideways over here, what we could see on this instant in time. So with that potential whatever trade deal news flow that is coming up into play, we will flip into a neutrality stance for today. So neutral between the short-term pivotal resistance that we have for yesterday on the US Wall Street 30. Okay, let me put it in different color. All right. Okay. So neutral between 41,470/740, and the lower limit will be 40,690/430. All right. So neutral between these two zone over here, given that risk of a noise due to this impending trade deal news flow that is coming up in the US session at 10 p.m. Singapore time. So very similar on the Nasdaq 100 as well, as it continues to trade in a sideways range. So yesterday, Expose we call it Expose release, the immediate release of the FOMC meeting. It hit our first support level at 19,600. You know, yesterday we do have a bearish bias, and thereafter it managed to stage a bounce in today's Asia session, also due to that optimism of that trade deal announcement that is out at 10 p.m. Singapore time later today. So given the potential noises that we may see in the US session thereafter, so we will flip to a neutrality stance for today. So neutral between the medium-term pivotal resistance zone of 20,250 slash 20,390. So let me change into the different color to representing a neutrality stance for today. Oops. Okay, so this will be the lower limit of the neutrality zone, 19,600. Okay, so flip to a neutrality stance between 19,600 and 20,250 slash 20,390 for today on the Nasdaq 100 as well. So that sum up the intraday technical outlook on those all the broad-based stock indices. So let us turn our focus now to the commodities market, starting with gold XAU slash USD. So for gold XAU slash USD, it continues to rally over here. So it totally seems to be convinced of the optimism that may start to arise from that impending 10 p.m. US trade deal announcement with a major country as deemed by Trump. So what you could see over here yesterday, weakness during the US session, exposed FOMC managed to hold at yesterday's Asia session low, which is 3,360, and we have a positive price action right now as we are speaking. So with that, I will have a tightened short-term pivotal support for today to maintain our intraday trend bullish bias for gold XAU slash USD, which is 3,309. That also correspond to the rising 20-day moving average coming very close to it as well. So as long as 3,309 short-term pivotal support holds for today, we will maintain our intraday trend bullish bias. First resistance to watch 3,420 slash 435. Above it may see a retest on the current all-time high at 3,500. Only a breakdown and an hourly close below 3,309 would negate today's intraday trend bullish bias on gold to see a choppy corrective decline sequence unfolding. First support level to watch 3,265. Only a breakdown below 3,265 may trigger a deeper minor corrective pullback to expose the next near-term support zone at 3,194 slash 3,162. So i.e. still maintaining that intraday trend bullish bias on gold XAU slash USD, but we will use a slightly higher adjusted short-term pivotal support for today at 3,309. Next up will be the West Texas crude oil. So West Texas crude oil, we have a bearish bias yesterday, and price action reacted nicely right exactly at our short-term pivotal resistance level, 60.35, and shaped that bearish move and hit our first support level at 58 figure level. So right now, price action is coming very close. It's actually close to the oversold level before it bounced, but no clear signs of a bullish reversal yet. So no change, still using the 60.35 short-term pivotal resistance level for today, still maintaining our short-term intraday trend bearish bias for West Texas oil below 58 figure level, may revisit the 9th of April swing low level at 55.50. Only an hourly close above only an hourly close and a breakout above 60.35 short-term pivotal resistance that would invalidate today's intraday trend bearish bias on West Texas oil to see another round of a corrective rebound sequence unfolding towards the next intermediate resistance at 62.39, followed by 63.88. All right, so still maintaining the intraday trend bearish bias on West Texas oil using 60.35 as my short-term pivotal resistance level. So with that, let's sum up the intraday technical outlook on those broad-based cross asset classes. Now let's have a quick look at the economic calendar. What are the key data to look out for today? So for today will be Thursday over here. So for Thursday in the European session, what's important will be at 7:02 p.m. So very strange, I know I put 7:02 p.m. We have the Bank of England interest rate decision outcome. So market participant is expecting a 25 basis point cut to reduce it to 4.5%. So this outcome may potentially impact the sterling dollar, but the sterling dollar right now is looking rather bullish based on the price action. All right, then thereafter, we also have the release of the meeting minutes as well, also up at 7:02 p.m. Singapore time, same time for the Bank of England. So thereafter, as we head into the US session, 9 p.m. we have US of not US ECB official speaking, ECB Tian Tiominan speaking that could impact the euro dollar and the euro crosses. So that is 9 p.m. Singapore time, and at 10 p.m. Singapore time, this will be that so-called news conference 10 a.m. Washington time, that means 10 p.m. Singapore today, where Trump will reveal who is the major country that so far has the first trade deal that is being signed with US, right? So that may move especially the major US stock indices, all right? So that is 10 p.m. Singapore time today, right? So it's not inside the calendar over here, but inside the news flow that I share with you guys. And also, so we have, that's about it. So there is no other tier one economic data release in the entire US session on Thursday. So before our daily dose Friday tomorrow at 7:30 a.m., there's some tier one Japanese data to take note of. Will be household spending and average household cash earnings. So that will release at 7:30 a.m. Singapore time. All right. So that could impact the Japan 225 and the dollar yen and the yen crosses. And at 11 a.m. Singapore time, we have the balance of trade for China. So that could potentially impact the Hong Kong 33. All right. So with that, sum up today's daily dose of market insights. I'm Kelvin here. Wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.